friends, Heather Lytle Communications. How are ya? We're cleaning up our financial act this month. Yes. So, couple things. We talked about expenses, and we're going to talk about bank reconciliations. Don't groan, don't groan. So here's the deal with that. Okay. So I'm old fashioned when it comes to banking and that kind of thing. And I balance my checkbook. I just do. Okay. It's just a thing that I do. But here's the deal. In your business, you need to balance your checkbook, especially if you have employees, or especially if you have employees that are helping you process payments or, pay bills or those sorts of things because it's a fraud risk. Okay. So getting your financial act in order, let's like go back into that a little bit. So getting your financial act in order means different things to different people. To me, it means one, you're confident and the figures that you're reporting are correct. You're confident that you have all the supporting documentation that you need. And you're confident that when you go to your accountant, everything is going to be stellar A-okay. Okay. Maybe some small mishaps, some small bumps, but it's got to be cleaned up and ready to go. And one of those things is bank account reconciliations. What does that mean? Okay. So an invoice gets paid, you have a client payment come in, making sure that that payment is deposited into the account and also recorded in your bookkeeping software. Okay. Same goes for expenses. We talked about expenses in the last video. We're going to talk a little bit more about expenses from the perspective of I go out and I use my debit card. I take somebody out to coffee. I go out and I buy a paper, or I have to renew a membership and they send me an email receipt. I need to keep those receipts. Keep the receipts. But also I need to make sure that I get that recorded into my accounting software. Okay. So you get these recorded in the accounting software. You get the transactions that are coming through on the bank. Now it's time to balance. It's a balancing act, right? So you need to make sure at least once a month. This is my serious face, guys. Once a month that you're going through all the transactions you recorded in your accounting software versus all the transactions that come through the bank account. And you make sure that you have everything that's been recorded and receipts, but we're going to go with recording. Everything that's been recorded is reflected in the bank account. Everything that's in the bank account, which is probably more likely, everything that's in the bank account needs to be recorded in there, and then they match. If you have outstanding items, they need to be explainable. And that's, and sometimes that happens. Like there is a parking garage that I go to here in town that daggone place never gives me a receipt. Never. And it's got a receipt button. I push the button, I'm like, "Where's the receipt?" Never get a receipt. But it's like $1.75 when I go there, right? So yeah, I'm not just, the IRS is not coming to me for $1.75, right? But because I don't have the receipt, I always forget to record it till I get to that bank account reconciliation at the end of the month. And I'm like, oh yeah, that has happened. So here's the thing with that. Because you're reconciling, you see what's coming through on the ledger versus what's coming through on the bank account, and you know that they match. If you're just looking at the bank account, things could be coming through, things might be missed as far as incoming payments, any of those things. Okay, we'll talk about incoming payments in a minute. But if you're only looking at the bank statement, and really if you're just like, oh yeah, I looked at the bank statement, Don't do that. If you're only looking at the bank statement, you're not seeing things that might be being falsely recorded. Okay. Because that's how fraud works. It's like somebody records receipts, and it looks really good, but it never comes through in the bank. So you need those two things to compare to each other. Okay, same goes for incoming payments. If somebody is not recording incoming payments, or say they're going out, you know, if you have a trade show type business, or you're using Square or Venmo, and you have an employee that sets up their own Venmo and starts taking money that belongs to you into their own personal Venmo. Okay. And so somehow you see the receipts, you know, there's, you know, it's reflected in the inventory, those sorts of things. So making sure that you're reconciling your bank statements. Also, it helps you with budgeting. I know. Don't throw anything at me. I know budgeting isn't the most fun thing to do. Okay. It's not the most fun thing to do, but it's part of life, right? You got to know where that money's going. And that's part of being a business owner. And that is also part of cleaning up your financial act. So bank recs, making sure that things tie back, making sure that you understand all the transactions that are coming through, especially if you have somebody else running your AR and AP, you need that behind the scenes check to make sure that everything is flowing as it should, and helps prevent fraud, but also make sure that everything is jiving and working like you expect it to. Okay. Also making sure that you're watching those receipts, and also making sure that you understand where the money's going and where the money's coming from. It's part of being a business owner. Nobody said it was going to be fun all the time. Because believe me, it is not fun all the time. Okay. But that's it for this time with Heather Lido Communications. Check us out again in this space for more tips and tricks on how to clean up your financial life.